Okay, so we were discussing about various concepts and conventions of accounting, right? So, various concepts of accounting. What do you mean by accounting concept? Anyone? Accounting concepts are the rules and principles that are used for recording various transactions and for preparation and presentation of financial statements. So the first basic principle or basic concept was business entity concept. So business entity concept was of the view that business is treated as a separate entity or separate person from its owner. Hence, only those transactions are recorded in the business that affects the business. The personal transaction of the owner are not recorded in the business at all. Okay. Now coming to the second principle or second concept of accounting is what? Money measurement concept. Money measurement concept means what? This concept tells that only those transactions are recorded in the books of account which can be expressed in terms of money. Just wait. Okay. Only those transactions are recorded in the books of account that are recorded in terms of money only. Okay. That can be measured in terms of money. See, this concept assumes that all transactions must be in terms of money, that is in the currency of the country. Okay. For India, INR, Indian rupees is our currency. So in our country, such transactions must be expressed in terms of rupee. So thus we can say that as per as per money measurement concept, the transactions which can be expressed in terms of money are recorded in the books of account. Okay, for example, purchase of goods for rupees 10,000, sale of goods 8,000, payment of rent. All these transactions are recorded. Why? Because they can be expressed in terms of money. But certain transactions are there or certain items, events are there that cannot be expressed in terms of money. Hence, that are not recorded. See here. But the transactions which cannot be expressed in terms of money are not recorded in the books of accounts. For example, sincerity, loyalty, honesty of employees are not recorded in the books of account. Why? Because these cannot be measured in terms of money. Although they do affect the profit and loss of the business concern, right? Because when our employees are loyal, sincere, and honest, our business will be in a good position. Our business will be earning good profit. So the loyalty, the honesty, and the sincerity of the employees that affects the business, but we are not recording that items. Why? Because that items cannot be expressed in terms of money. So very simple concept money measurement is that we will record only those transactions that can be measured or can be expressed in terms of money. Like purchased goods worth rupees 10,000. So we can express this purchase in terms of money. That is, we will record this transaction. Sold goods worth rupees 8,000 for 10,000, or paid rent of rupees 2,000. Okay, paid electricity bill of 1,000. So we will record all these transactions. But sincerity of employees, loyalty of employees, efficiency of management, okay, that cannot be expressed in terms of money. Hence, we will not record that items in our books of account. Very simple concept this is. Okay. See, so what is the significance or importance of this concept? See, significance or importance. Significance means importance. Why this concept is important? I'm writing here. Okay. Significance means importance. Okay. So what is the importance of this concept? What are the importances? First one is this concept guide the accountant, okay, about what to record and what not to record. This concept clearly states the accountant that you record only those items or those transactions which can be expressed in money, and you should not record those items which cannot be expressed in terms of money, right? So this concept clearly gives an idea to the accountant that what to record and what not to record. Second, it helps in recording business transactions uniformly. Uniform means what? For example, we want to compare our sales, okay, our sales of December month and April month, or our sales of this year and our sales of previous year. So we will compare our sales of previous year is 10 lakh rupees, our sales of this year is 8 lakh rupees. So it will be very easier for comparison when all the sales are expressed in terms of money, right? But if we have recorded like this, the sales in 2021, okay, is 100 kg. The sales in 21-22 is 10,000 rupees. Is it easy? Means will it be easy to compare the sales of these 2 years? 1 year sales is expressed in terms of quantities. The sales of another year is expressed in terms of money. So it is not easy to compare, or it is not justified to compare at all, right? So this concept helps in recording business transactions uniformly. Okay, means in terms of money only. Okay, all the business transactions are recorded in terms of money. We will record purchase of goods 10,000, sale of goods 8,000, payment of rent, payment of electricity, payment of salary. All these items are recorded in terms of money only. But if we will record purchase of goods 100 kg, sale of goods 50 kg, payment of rent 200 rupees, okay, payment of electricity bill 100 rupees. So here in this case transactions are not recorded uniformly. Uniform means similar types, okay. But if we will record all the transactions in terms of money only, then it will be very easier for the accountant to calculate the profit loss, to compare the result of 1 year with another year, right? Then third one is, if all the business transactions are expressed, just wait. Okay, so third one is what? If all the business transactions, okay, so if all the business transactions are expressed in terms of money, then it will be easy to understand the accounts prepared by the business enterprise, right? All items, just now I have given the example that if you will express that purchase in quantities, sales in quantities, payment of rent in rupees, so it will not be easy to compare it, it will not be easy to understand, right? But if we will record all the transactions uniformly, that is in terms of money only, it will be very easy to understand, okay. Then coming to next one, it facilitates comparison of business performance of two different periods of the same firm, or two different firms of the same period, okay. Just I told that it will be very easier to compare also if we have recorded all the transactions in terms of money only, okay. If you want to compare the sales position of 2 years, that is 2021 and 21-22. So we will compare that sales of 2021 is 8 lakh, sales of 21-22 is 10 lakh. So we can easily compare which is better one, okay. But if we will record like sales of 2021 is 100 kg, sales of 21-22 is 10,000 rupees, it will not be easier for the accountant or for the users to compare, okay. So this principle, very simple principle, it states that only are those items which can be expressed in terms of money, that are only recorded in the books of accountant. Apart from that, no other transaction, that is the transactions or the items which cannot be expressed, that are not recorded in the books of accountant. So now here one question is given, you have to tell which of these following items will be recorded or should be recorded in the books of accountant and which are not. First one, tell the answer me, health of managing director, it should be recorded in the books of account or not?
Okay.
It should not be.
It should not be. Why? Because health of MD cannot be expressed in terms of money, so we will not record these items, okay. Then coming to second one, purchase of factory building for rupees 10 crore, shall we record
Yes.
or no? Yes,
Yes,
we
we
will
can record.
record this. Okay, because this is expressed in terms of money. Then rent paid. What we will do? Record or not?
Yes, we can record.
Yes, we will record. Rent paid 10,000 rupees. Then goods worth rupees 10,000 given as charity. Charity means as a donation, like that. So you have given, or your business has given 10,000 goods as a charity. So what should you do?
It
Will
must
you
be
record or
recorded.
not?
It's
Still,
money.
it should be recorded.
Right. It should be recorded because we have given goods worth rupees 10,000. Okay. Delay in supply of raw material. What we will do?
Should not record.
It should not be recorded. Why? Because the delay cannot be expressed in terms of money. Okay. Very good. So got it clearly, money measurement concept. Only those items which are expressed or which can be measured in terms of money, that are only recorded in the books of accountant. Apart from that, no other transactions or no other items are recorded. Then coming to the next concept, that is going concern concept. This is also one of the basic concept or basic principle of accounting. This concept states that, or this concept assumes that business will continue to carry on its activities for an indefinite period of time. That is, business will be treated as a going concern, not as a gone concern. Simply stated, it means that every business entity has continuity of life. It is the very basic assumption. Whenever a businessman starts his business, he always assumes that my business will continue for a long period of time, for an indefinite period of time, right? Yes or no? Everyone is assuming like that. Those persons who are doing business, they are always assuming that my business will continue for an indefinite period of time, for a long period of time. Okay, so this is being stated by going concern concept. Every businessman should assume that my business will run for a long period of time. Thus, it will not be dissolved in the, dissolve means closed down. Okay, my business will not be closed down in the near future. It will run for a long period of time. This is an important assumption of accounting. Why? As it provides a basis for showing the value of assets in the balance sheet. See, for showing the value of assets in the balance sheet. Okay, this assumption is very important, or this principle is very important. Why? Because we will show the assets in the balance sheet at the proper value. How? Now I will explain you. Example is also given. Already I have told you about depreciation. What do you mean by depreciation?
Decrease in the
Depreciation.
value of asset.
Very good. Decrease in the value of asset. Okay. So this is called as what? Depreciation. See, here I am writing. Okay. Depreciation. So depreciation means what? Decrease in the value of asset. One example I am giving you. You purchased one asset by paying rupees 1 lakh. Cost price of that asset is how much? 1 lakh rupees. Okay. And it is expected that this asset will run for a period of 10 years. Okay. Life of that asset is 10 years. 10 years. Okay. It will run for 10 years. Right. Cost of the asset is 1 lakh. It will run for 10 years. So per year depreciation amount is how much? 10,000 rupees. Yes or no? Every year the decrease in the value of the asset will be rupees 10,000. Yes or no? Yes or no?
Sir,
Yes.
can you
Understood or
explain
not?
it again?
Okay. I will explain again. Just see. You purchased one machinery for your business. Okay. You purchased one machine for your business. Okay. And the cost of that machine is cost. Cost means the price paid at the time of purchase. So you paid 1 lakh for that machinery. That the life of that machinery, life means what? It will run for 10 years only. Okay. So it will run for 10 years. After 10 years, it will not be in a condition to be used in the business. So it will run for 10 years only. So every year depreciation means decrease in the value of asset will be how much? 10,000 rupees. Why? Because 1 lakh rupees total cost and it will run for 10 years. So 1 lakh divided by 10, that is 10,000 per year. Yes or no? 1 lakh divided by 10 years. So per year we will use 10,000 value, right? Yes or no? Got it now? Just tell me. Did you get the concept of depreciation first?
Yes, sir.
Okay. So we purchased one machinery by paying 1 lakh rupees. It will run for 10 years. So 1 lakh divided by 10 year means per year the value decrease will be 10,000 rupees. So here what happened? Whenever we are charging depreciation 10,000 per year, if we will consider depreciation 10,000 per year, it means what? We are assuming that our business will also run for 10 years. Yes or no? Our business will also run for 10 years. That is why we are charging depreciation 10,000, 10,000, 10,000, and we will charge up to 10 years, right? But if we will assume that our business will dissolve in the next year, then simply we will show this 1 lakh as depreciation in 1 year. Okay, हम एक साल में depreciation show कर देंगे. क्यों? Because our business is going to be dissolved in the next year. But here what we are doing? We are simply charging 10,000 as depreciation per year. It means what? We are assuming that our business will run for at least 10 years. That is why every year we will charge 10,000, 10,000, 10,000, 10,000, and we will charge up to 10 years. That example here given. See, for example, a company purchased a plant and machine of rupees 1 lakh and its lifespan is 10 years. So according to according to this concept means according to going concern concept, every year some amount will be shown as an expense and the balance amount as an asset. Thus, if amount is spent on an item which will be used in the business for many years, then it will not be proper to charge the amount from the revenue of the year in which the item is acquired. It means what? Here we have expended or we have made an expenditure of 1 lakh to purchase that machine. So we should not show the entire 1 lakh in 1 year as expense. Okay, हम एक साल में इस एक लाख रुपया को expense नहीं दिखाएंगे. Right? What we will do? We will divide that 1 lakh in number of years that machine is going to be used. जितना साल machine use होगा उतने साल में हम divide कर देंगे. So we will divide by 10 years. So 10,000, 10,000 every year we will charge as expense. Okay, got it clearly? This is what going concern concept tells. Okay, that you should assume that your business will run for a long period of time and accordingly you charge depreciation on your assets. So what is the importance of this concept? Where is it? Sorry. Okay, so what is the importance of going concern concept? Significance means importance. So what is the importance of going concern concept? First point is this concept guides an account. Sorry, this is money measurement. Okay. Yes, now we will discuss. So what is the importance of this concept? This concept facilitates preparation of financial statement. Okay, we will record financial statements and we will record various assets and liabilities in proper value. That is, we will record all the assets by deducting the exact value of depreciation. Okay. Second one is this, on the basis of this concept, depreciation is charged on fixed asset. Just now we discussed. Okay. As per this concept only, depreciation is charged. Then coming to third one, it is of great help to the investor because it assures them that they will continue to get income on their investment. It means what? Those investors, they are investing money in your business. Okay. So they will also get an assurance that your business will continue for a long period of time, and they will get income on their investment. Whatever money they have paid to your business, they will get income on that, and after a certain period they will get back their money. Okay, they will also get an insurance. Why? Because you are considering that your business will run for a long period of time, and accordingly you are providing depreciation, accordingly you are preparing your profit and loss account, accordingly you are preparing your financial statements. So investors also get an assurance that yes, this business will run for a long period of time, and we will get regular income on our investment. Whatever money we have paid, we will get income on that money regularly. Okay, because this business will run for a long period of time. Then coming to point number 4. So point number 4 is what? In the absence of this concept, the cost of fixed asset will be treated as an expense in the year of its purchase. If this concept will not be followed, अगर मान लो ये concept follow होता ही नहीं, so what will happen? We will simply see here what cost of machine is 1 lakh. So what we will do? We will charge 1 lakh as expense in the year in which the machine is purchased. जिस साल हमने मशीन परचेज किया उसी साल ही 1 लाख रुपया एक्सपेंस शो कर देंगे. बट वी आर नॉट डूइंग लाइक दैट. वी आर फॉलोइंग दिस कॉन्सेप्ट एंड वी आर showing 10,000 as expense every year. Okay, 10,000 as depreciation every year. Then the next importance is what? A business is judged for its capacity to earn profit in near future. So what happens? When a businessman assumes that my business will run for a long period of time, so accordingly he plans his profit and loss, accordingly he plans everything, right? He judges that in the next year I will earn this amount of profit, after that I will earn this amount of profit. Okay, so on the basis of this concept, a business is judged for its capacity to earn profit in future. Okay, so this is very important concept, and all the financial statements are prepared on the basis of this concept. Okay, concepts are nothing but these are the rules and regulations of accounting, which are necessary for recording various transactions, which are necessary for preparing our financial statements. Okay, now some multiple choice questions in this regard are given. You have to answer that. Going concern concept states that every business will continue to carry on its activities for dash definite period or indefinite period. Just now we discussed.
Indefinite
Answer
period.
me. For an indefinite period. Indefinite, not definite. Indefinite. Okay, means for a long period of time our business will continue. Okay, you should not assume that your business will close down in near future. You should always assume that my business will continue for an indefinite, for a long period. Indefinite means for a long period of time. Okay, so answer will be indefinite period. Then coming to second, fixed assets are shown in the book at their cost price or market price.
Cost price.
Cost price, very good. At their answer is cost price. Okay, cost price means what? The price paid at the time of purchase of fixed asset. So whatever the price we are paying, we will record only that price. If we paid 1 lakh to purchase the machinery, then we will record the machinery 1 lakh in our books of accounts. So fixed assets are shown in the book at their cost price. Then coming to next, the concept that a business enterprise will not be closed down in near future is known as going concern or money measurement.
Going
Which concept?
concern.
Going concern, very good. Going concern concept tells that our business will not be closed down in near future. We will continue our business for a long period of time. Okay, then coming to next, on the basis of going concern concept, business prepare its dash financial statement or bank statement.
Financial statement.
Financial statements. Okay, means profit and loss account, balance sheet, all this. Then coming to next one, dash concept states that business will not be dissolved in near future. Same question. Going
concern concept.
very good. Going concern concept tells that our business will not be dissolved. Dissolved means closed down in near future. Okay, so simple, it is very simple. Going concern concept, what does it state? It states that business will continue for an indefinite period of time, and you should record your transactions by following this principle or this concept. Okay, the next concept is accounting period concept. This is also very easy. Accounting period concept means what? Whatever the transactions we are recording, okay, that or whatever the accounting we are preparing, that must be for a specific period. Means already I have told you, every businessman, those who are doing business, they are recording their transactions, and at the end of the year they are finding out profit and loss and financial position of the business. This 1 year is called as accounting period concept. Okay, so here it is given all the
Sir,
transactions.
excuse me.
Yes,
What was the third concept, sir?
see, first one business entity,
Yeah,
second one money measurement,
yeah.
third one going concern concept,
Okay.
and now this is the fourth one, accounting period concept.
Yeah, but this is showing fifth concept now.
Fifth, no, to pay, just
Maybe
wait.
it is topic number 2.5.
Right, it is topic number 2.5.
Oh,
See,
okay.
okay, here also it is given, you can see business entity, money measurement, going concern, fourth one is accounting period concept. Here also
It's
it is
topic
given.
number. Okay, thank you.
Okay, okay. Okay, so we will discuss now accounting period concept. See, so accounting period concept means what? All the transactions, all the transactions are recorded in the books of account on the assumption that profit on these transactions are to be ascertained. Ascertained means calculated or determined for a specific period. This is known as accounting period concept. Okay, thus this concept requires that a balance sheet and profit and loss account. See, in our financial statement we have mainly two statements. One is balance sheet, another one is profit and loss account. Okay, what is that we will discuss in upcoming chapters. So the balance sheet and the profit and loss account, that is the financial statements, should be prepared at regular interval, that is for a particular period. This is for different purposes like calculation of profit or ascertainment of financial position or tax computation. Every year we have to pay taxes also. Every year we have to know our profit and loss. Every year we have to know our financial position. So that is why this concept says that all the transactions are recorded on the assumption that we will find out profit and loss, we will find out our financial position after a specified period or for a specific period. Okay, see, so just directly come here. See, further this concept also assumes that indefinite life of the business is divided into parts. So these parts are known as accounting period, because just now we have discussed that the life of the business will or the business will continue for an indefinite period of time. Okay, so will you wait for the what, close down of the business? Suppose you started business now. Okay, you are not calculating your profit every year. You are waiting that when my business will close down, I will calculate profit on that time only. So is it justified? No, we are always assuming that our business will continue for a long period of time. So what we will do, we will calculate our profit and loss every year. Okay, this is called as accounting period. Directly come to this, see, the accounting here it is written, the accounting period may be of 1 year or 6 months or 3 months or 1 month, but usually 1 year is taken as an accounting period, which may be a calendar year or a financial year. Okay, so accounting period may be of 1 year, maybe of 6 months, maybe of 3 months, or maybe of 1 month also. But generally or normally 1 year is taken as the accounting period, and that 1 year may be calendar year or maybe financial year. Calendar year means what? The year which starts from 1st of January and ends on 31st December. This is calendar year, and the year which begins or which starts on 1st of April and ends on 31st March, that is called as financial year. Clear? Calendar year means 1st January to 31st December, and financial year means what? 1st of April to 31st March every year. Okay. So now can you say now which financial year is going on? Can anyone answer me? Now which financial year is going on?
2022 to 2023.
Very good. 2022 to 2023, because this year started from 1st April 2022, right? And this year will end on 31st March 2023. Okay. So now the current financial year is 22 and 23. Okay. So this is the financial year that is starting from 1st of April and ending on 31st March. Calendar year is what? 1st January to 31st December. This is called calendar year. Okay. Here also given, you can read it. Sorry. Okay. Here also given, you can read it. Okay. So accounting period concept, what does it state? It states that all the accounting or all the transactions recorded and profit and loss of the business should be calculated after a specified period. That period may be for 1 year or maybe for 1 month or 6 months, but generally 1 year is considered as the accounting period. So what is the significance or importance of this concept? Why this concept is important or important? Okay. See, first one is it helps in predicting the future prospect of the business. If you will calculate profit and loss every year, then you will predict your future. Okay, if you are incurring losses means you can predict that my business will close down in near future. So you will accordingly try to rectify the mistakes whatever you are doing, or you will try to earn profit instead of losses. You will plan your activities accordingly, right? So it helps in predicting the future of the business. Second one is it helps in calculating tax on the business income calculated for a particular time period. Okay, we are calculating business income, that is profit and loss every year. So on that profit and loss, we are calculating taxes also, and we are paying that taxes to government. Okay. Then next is it also helps the banks, see, financial institutions or creditors to assess and to analyze the performance of the business for a particular period. So for example, we want to take a business loan from the bank. So whenever we are going to the bank demands financial statements from us. It means what? Bank tells that you just bring your profit and loss account. Okay. So by observing or by analyzing your profit and loss account, bank judges the strength of your business, and accordingly bank decides whether loan should be granted or not. So these are very much useful to the users of accounting information also. Then coming to next, it also helps the business firm to distribute their income at regular interval as dividend. Do you know what is dividend? Anyone? Any idea about dividend?
Sharing our profit, some
shareholders.
amount of the profit with employees, with partners, board of
Right,
directors.
right. Very good, very good.
Like
So,
distributing the profit to the shareholders is dividend.
right. Very good, very good. Exact answer. Distributing a company, whatever the profit that a company calculates every year. Okay, for example, simple example I am giving you here. The profit of the company is suppose 100 rupees. Okay, one company is there, A Limited. The profit for the year is 100 rupees. Okay. How much profit? 100 rupees. The company has earned a profit of 100 rupees and 10 shares are there. 10 shares are there. Okay. 10 shares means what? Shares means what? Those who have invested money in the company, they are called shareholders. Okay. So 10 shares or 10 shareholders are there. You just assume 10 shareholders are there. So total 100 rupees profit is there. So what will happen? We will divide this 100 rupees among 10 shareholders. Okay. So we will get 10 rupees per shareholder. Yes or no? 100 by 10 equal to 10. So we have divided the profit and we are distributing the profit to each shareholder. This is called as dividend. Dividend means what? Part of profit. Okay. Profit का हम part बना लिए हम. Okay. So part of the profit distributed to shareholders. That is called as dividend. Okay. So this concept also helps the business to distribute the profit as dividend. Okay. Because we are calculating every year profit, accordingly we will distribute that profit among shareholders. So these are the significance or importance of this concept. Now some questions are
Sir,
given,
this
we will
can
do.
be not only shareholders, they can be employees also.
No, employees are given salary. Okay. Employees are given salary. And what, see, salary is an expense. Salary is expense. Okay. And all the incomes of the business. Okay. Income of the business are there, expenses of the business are there, and we will deduct or we will minus the expenses from the incomes. Then after we will get our profit. After that we will distribute that profit to shareholders. Clear? So profit is always distributed to owners. Okay, that distribution is called as dividend. Okay, but employees are getting salary. Okay, they are working for the business and they are getting salary. So now tell me, recording of business transactions in the books of account with a definite period is called as days concept. For a definite period we are recording the transactions, that is what?
Accounting period concept.
Accounting period concept. Very good. Accounting period concept. Okay, we are recording for a particular period only, that is accounting period concept. The commonly accepted accounting period in India is, just now we discussed, 1 year. 1 year. Okay. In India, accounting period is not only in India, all over the world. Okay. So 1 year is accepted as the accounting period, but it is not compulsory for all. You can accept 6 months as your accounting period. You can accept 1 month as your accounting period. But normally 1 year is considered as the best accounting period. Okay. So in India also, the accounting period is 1 year. Okay. Now the coming to third one, according to accounting period concept, revenue and expenses are related to a days period, are related to a particular period. Okay, related to a particular period. Okay, accounting period concept states that income of particular period, particular period means what? For example, 21-22, income of 21-22, expenses of 21-22. Okay, and we will deduct the expenses of 21-22 from the income of 21 and 22, and we will get profit for 21 and 22. So revenue of a particular period and income of a particular period, okay, are compared to determine the profit of that particular period. Okay, this is being stated by accounting period concept. Clear? Now we will move to next concept. That is what? Cost concept. Okay, accounting cost concept. Okay, sorry, other questions are also there. Sorry. Okay, so now if see, Just see this question also. If accounting year begins from 1st of January and ends on 31st December, this is called as which year?
Calendar year.
Calendar year. Very good. Calendar year. If accounting period begins from 1st of April and ends on 31st March, this is called as what?
Financial year.
Financial year. Okay. Very good. 1st of January to 31st December, calendar year. 1st of April to 31st March, financial year. Okay. Now we will discuss cost concept, accounting cost concept. See, cost concept states that this is also very important. All the assets are recorded in the books of account at their purchase price. Just before I have told you. Okay. So cost concept states that all the assets means machinery, plant, okay, furniture, whatever we are purchasing, that to whatever we are purchasing to use in our business, like machine, furniture, building, all these are assets. So these assets are always recorded at their cost price or at their purchase price, okay, which includes purchase price. See, purchase price includes cost of acquisition, means cost of purchase, transportation and installation, not at its market price. It means what? See, I'm explaining in detail. So this concept states that you should record your assets at cost price or at purchase price, not at market price. Now question comes, what is purchase price? Purchase price means what? Or cost price means what? Cost price means cost of purchase. Okay, cost of purchase, right? Cost of purchase. Then transportation, if any. Why transportation is required? Transportation is required to bring that machine from the market to your business, and after bringing that machinery, you will set up that machinery, right? Okay, you will put that machinery to use. Means simply you cannot place that machinery and you can means simply you bring that machinery from the market to your business and you cannot start production by using that machinery. So what you will do after bringing that machinery? First, you have to make installation. Okay, you have to make installation. Installation means what? All the settings that will be what? Easier to use the machinery. All the settings. Okay. For example, you have purchased CCTV. Simply by purchasing CCTV, you cannot use. So you have to install that CCTV. So for the purpose of installation, some expenditures that business has to incur. Business has to pay some money also for the purpose of installation. So, purchase price includes what? Cost of purchase, transportation and installation charges. Okay. For example, you purchased the machinery by paying 1 lakh rupees. Okay. You purchased by paying 1 lakh rupees. After that, transportation is 5,000. Okay. Then for installation, you paid 2,000. Okay. You employed some laborers and they installed that machinery. So they took 2,000. Now the purchase or the cost price of the machinery is 1,07,000. Yes or no? 1 lakh is purchase price, 5,000 is transportation, 2,000 is installation. So the cost of that machinery is 1,07,000 now. Got it clearly? So cost concept states that you should record your assets on the basis of cost price, not on the basis of market price. Okay. The market price of the asset may be more than this or may be less than this, but we will always record the price paid, okay, or the cost price. And cost price includes what? Cost of purchase, cost of transport and installation charges, all these things. Okay. Example is also given. See, one example is given. A machine, see, for example, a machine was purchased by XYZ Limited for rupees 5 lakh for manufacturing shoes. So an amount of 1,000 were spent on transportation of the machinery to the factory site. In addition, 2,000 were spent on its installation. Okay. Now the total amount at which the machine will be recorded in the books of account would be sum. Sum means what? Total of all these three items. That is 5 lakh 3,000. 5 lakh is purchase cost, 1,000 is transportation charges, and 2,000 is installation charges. So the total cost at which the machine is recorded is 5 lakh 3,000. Okay. This is accounting period concept. For that, some adjustments are required. What is that? See, further it may be clarified that cost means original cost or acquisition cost only for new asset, and for used one, cost means original cost less depreciation. This is very important. Okay. When you purchase one new asset, that is, for example, here in this case, 5 lakh 3,000 is the cost price. But every year what we will do? We will minus the depreciation. Okay. Every year we will use depreciation and we will minus the depreciation. Accordingly, we will record the cost of the asset. For example, first year you purchase one asset by paying 1 lakh rupees. So first year the value of the asset is 1 lakh. So you will record this asset in your books as 1 lakh rupees. But after first year, you will charge depreciation 10,000 rupees. So on second year, the value of this asset will be 90,000 rupees. Okay. So cost concept states that you should record your assets on the cost price, not on the market price. And every year you charge depreciation on your asset and record the assets after charging depreciation also. Clear now? This is cost concept. Okay. So what is the significance of this concept? So importance is what? First is, this concept requires assets to be shown at the price at which it has been acquired, which can be verified from supporting documents. Okay. At the time of purchasing asset, you have some documents to verify that. Okay. Whenever auditor will come, he will verify that the cost of the asset is 1 lakh rupees. So he will verify that asset with the help of the supporting documents. Second, it helps in calculating depreciation also. Just now I said you, this concept also states that you charge depreciation every year. Okay. And the effect of cost concept is that if the business entity does not pay anything for an asset, this item will not be shown in the books of account. It means what? If you have purchased some asset by paying 1 lakh, then you will show 1 lakh. But if you have got some asset without paying a single price, it means what? You will not record the asset at all. Okay. Assets are always recorded at the price which is paid for acquiring it or which is paid for purchasing it. If you have not paid a single price and if you have got an asset, then you should not record that asset in the books of account. Clear? Some in-text questions are there. After this, we will wind up our session here. Just tell me now, the cost concept states that all fixed assets are recorded in the book of account at their dash price. Which price? Answer me.
Purchase price.
Purchase price. Very good. Purchase price or cost price. You can write purchase price or you can write also cost price. Okay. Second, the main objective to adopt historical cost. Historical cost means what? Original cost, whatever you have paid. Okay. Since you have paid the cost, okay, you have paid 1 lakh rupees and historical. Why? Because you have already paid. After that, you are recording the that payment in your books of account. That is this is called as historical cost. So historical cost is nothing but it is only the original cost. Okay. Historical cost is nothing but it is original cost, right? Okay. So the main objective to original cost or purchase cost, you can say. So the main objective to adopt historical cost in recording fixed asset is that the cost of the asset will be easily verified from the dash documents. Answer me please. From the supporting documents. Okay. Supporting documents means vouchers, cash memos. Yesterday we had discussed that if you have paid 1 lakh and you purchased that machinery, So in this case, the seller will give you one voucher, okay, for 1 lakh rupees. So that will be the supporting document. So easily one can verify the price of that asset from that supporting document. That is why it is necessary to record the assets at their original cost, okay, or at their historical cost. Remember, historical cost is nothing but it is the original cost. Then these three questions are there. The cost concept does not show the days of the business. The cost concept does not show the days of the business. Anyone?
Financial position.
See, actually, it should be like the cost concept show the financial position, okay, but does not show. If you want to does not show means does not show the days of the business. Financial position will not be appropriate. Why? Because cost concept states that you should. Okay. Sorry. See, the cost concept does not show the financial position of the exact financial position. Why? Because cost concept states that you should show your assets on the cost price, not on the market price. So the market price of the asset may be more or may be less than that of the cost price, but we are recording only the cost price. That is why here it is stated that cost concept does not show the exact financial position of the business, okay, because exact financial position can be known from the market price, right? Then coming to next one, the cost concept is otherwise known as dash concept. Anyone? The cost concept is otherwise or also known as which concept?
Historical cost, we can say.
Historical cost concept. Very good. The cost concept is also called as. Okay. Here we will wind up our session for today. If any doubt is there, you can ask me.